evening to all our attendees and a very good morning to all our panelists. A warm welcome to IREX Residency and Citizenship Conclave Virtual Edition. It's great to have you all joining us from different countries, along with our esteemed panelists on this platform. Looking at these challenging times, we at GMN Media have put together this platform as an opportunity to educate all our esteemed investors, investment bankers, lawyers, immigration consultants about attractive citizenship and residency programs on offer. This panel discussion is on how to choose an EB5 investment for US immigration. Would be for an hour, followed by Q&As for 15 minutes. Without further delay, I would request Mr. Contreras, CEO of EB5 Marketplace, to take over as our panel moderator, who will briefly introduce himself and our esteemed panelists. Over to you, Kurt.
Thank you, Rohan. So I'd like to first introduce our panel, starting with Matt Hogan, and ask each of the panelists to take a minute and to talk a little bit about their business and themselves.
Thanks, Kurt, and I want to thank IREX for putting this together today and for everyone who's joined. It's a pleasure to be a part of these events. They're always fantastic, and so we always look forward to it. My name is Matt Hogan. I'm Vice President of Project Development for CMB Regional Centers. CMB is one of the longest active, one of the largest regional centers in the program's history. We were originally established back in 1997. And to date, we've worked with over 5,700 clients from over 100 different countries. And, we've been able to have a lot of success for those clients. And that's something that we take a lot of pride in. To us, that's the ultimate goal. You put the goals of the investor first, and their success becomes your success. And it's something we're very proud of. So thank you, Kurt, and I'll turn it back over to you.
Thanks, Matt. Lavanya, your mouse is moving around a bit. So if you could still that for a moment. Roberto Contreras with Houston EB5. How are you this morning?
Hi, Kurt. I'm doing great. Thank you, Kurt. And thank you to IREX and to all the attendees. I hope that you can get something out of this panel. And I hope it gives you a framework moving forward and how to evaluate EB5 projects. I'm Roberto Contreras with Houston EB5. The EB5 program holds a very special place in my heart and in my family's heart. My parents immigrated to the United States in 1984 and were finally able to get a green card through an EB5 investment in 1994. My father finally became a US citizen in 2008, or I should say my parents became US citizens in 2008. And we launched our EB5 Regional Center in 2010. I guess what makes us special is that we're a vertically integrated regional center. Which means that we invest alongside with our investors for win-win outcomes. Our projects are specifically structured so that we can't succeed unless our investors succeed.
Thank you, Roberto. And I'm sure people will get something out of this. This is a very strong panel today. Our next guest is Pardeep Kumar. Pardeep's with American Atlantic Partners. How are you this morning, Pardeep?
Everything's fine. Thanks, Kurt, and thanks, everyone. Thanks, IREX, and thanks, everyone. For sparing your valuable time to join us. My name is Pardeep Kumar, and I am a managing director at Atlantic American Partner. I am heading Southeast Asian regions in terms of business development and investment activity. With regard to Atlantic American Partner, we are a part of the 47-year-old investment banking group, and we are offering a very untraditional kind of the business model to the investors. We are offering a diversified fund business model, unlike the other regional centers who are focused on a single asset class. So we offer the basket of the different asset class where investors put into the investment amount. So the jobs are being created from the single asset with regard to the US immigration perspective, but the risk and returns are being diversified and they are coming from the basket of the asset classes. We are in this industry for over 10 years. We have successfully completed 35 projects and approximately 700 families got a green card. And the numbers along with the spouses and kids are 2,000 plus, 100% approval rate on I-526 and I-29. And we have closed many funds and returned the capital and the profits on the multiple offerings.
Thank you, Pardeep. There's a good recognition that the people that are representing projects on this have very different approaches and in many ways unique from other projects in the market. Also like to introduce Raj Chinai. How are you this afternoon, Raj?
Hi, Kurt. How are you? How's everyone? Pleasure to be here. Great panel and very excited to participate. My name is Raj Chinai. I'm a managing director at LCR Capital Partners. I am based in Dubai. I've been with the firm for about 3 years, and I spend a lot of my time working with the markets here in the GCC region, as well as India and Southeast Asia, and increasingly Africa. As far as our firm is concerned, we are a firm that's founded by an Indian as well. My partner is Suresh Rajan, who comes from South India, and he has gone through the journey, much like many of the folks in our audience, of securing a base in the US. We are a 7-year-old firm. I myself have gone through the green card process, having come from Mumbai, India, where I was born, and then eventually settling in California before making my way back to this part of the world. We're a full service firm, so we end up kind of running the full spectrum of identifying projects that we really believe in, completing due diligence, taking typically a co-GP or GP role, and then working alongside investors around the world. We have investors from over 30 countries that have chosen to work with us, and finding the right fit from whichever projects we may have on our platform. Great to be here, and looking forward to sharing more.
Thank you, Raj. Our next guest is Eric McAfee. Eric, I don't know if I should say good morning or good evening to you. It's pretty early in the morning for you, isn't it?
Yeah, well, welcome from California. This is our second EB5 project. We've been doing this since 2008 and have over 70 families that have gotten their green cards from our phase 1 project, which successfully was completed. We completed all the job creation, sustained all those jobs actually for over 10 years. We're now in phase 2, and we have 2 unique components of phase 2. Number one is it's a national interest expedite project. We worked with the Vice President's office at the White House, and we're able to determine that our project actually was in the US military national interest, as well as creating jobs. So our investors go to the head of the line, which technically is supposed to mean that within 90 days, their I-526 gets processed, instead of at the back of the line where everybody else is, which is typically anywhere from 1.5 to 3 year process of getting the I-526 adjudicated. So our project's a national interest expedite project, and we have a granted exemplar, which was a couple-year process of getting our project reviewed, so that simply the investor needs to have a proof of funds and have a clean personal record and can rapidly receive their US green card. And we have approximately 192 available slots. We've already closed some of the investors in our project, but it's large enough so that we can have approximately 200 additional investors, and we're actively moving to close the offering now. My company, Aemetis, is a publicly held company, which is very unusual. You can actually read the financial statements online. We have audited financials that get posted every quarter, and you can go back for the 15 years of our company and read our financial statements online. And so we have a very full disclosure kind of a format, which is also very unusual for EB5 programs. And then lastly, I should mention, we actually built a 50 million gallon biodiesel plant in India. We're the largest biofuels producer in the biodiesel industry in India. You can visit our plant. You can go to our headquarters. We have over 90 employees in Hyderabad and Kakinada, India. And that has been over 15 years that we've been operating in India. So we invite our potential investors to go visit our team in Hyderabad, meet our management team. And most of the people at our company have been with us for over 10 years. The senior executives have been there an average of 15 years. So very stable, long-term relationship with India. And of course, now in our second EB5 project, we look forward to getting to know some of your investors.
Great. Thank you, Eric.
Thank you.
And lastly, my background is in 2012, I started a due diligence firm as an independent third-party due diligence provider on behalf of investors. The goal was to provide strengths and risks analysis of both the immigration aspects and the likelihood of return of capital. Our firm has reviewed approximately 200 projects to date. Over the years, we've hosted a webinar series to educate the industry on securities laws as they relate to EB5. And I've served as chairman of IIUSA's Compliance Committee. Today, our investment platform, EB5 Marketplace, offers an online solution where investors can easily compare EB5 investments. The platform enables users to compare key terms of various projects, provides a strengths and risks analysis, and a downloadable full due diligence report on each project. We've had investors choose an investment in just days because the platform makes it so easy to understand every aspect of an investment. So with that, I'd like to get started. The first slide we have, thank you, Lavanya, is opportunities in 2021. And Roberto, I was wondering if you would start us off. What do you see as, where is EB5 headed over the rest of this year and maybe the future after that? And you're on mute, Roberto.
Well, I guess we got to look a little bit at the past. Last year was a record low year for the last decade for EB5 due to COVID. I would say COVID for the most part, also the regulatory changes that occurred in late 2019. So I think, you're looking anywhere between 400 to 500 applications all year last year compared to the typical 4,000 to 5,000 applications. So I think the opportunity here is that, especially for Indians, is that there's no retrogression right now. As the program starts to pick up in popularity, you might see a retrogression come back into play later on this year. But I think first and foremost, it's obviously COVID is a terrible thing, but it's definitely helped, I think, the USCIS to be able to catch up to some of these cases for quicker processing times, and also helped sort of clear that line a little bit.
Great. Eric, what are your thoughts? Where do you think EB5 is headed? Do you think it's a good future ahead of EB5?
We have on our board of directors one of the former secretaries in the White House cabinet. And so we've spent a lot of time with the new administration. We have a $125 million loan guarantee from the United States Department of Ag, which Tom Vilsack, who was just reappointed last week, led that agency for 8 years. On our board of directors is a former secretary of the United States Department of Agriculture. So we have spent a lot of time with the new administration. Jennifer Grunholm is the new secretary of the Department of Energy. And we have, I would say, a very high level of confidence that the Biden administration is going to try to maximize the job creation opportunity that comes from foreign investment without some of the complications about immigration that perhaps the previous presidential administration had. I think this is kind of obvious to anyone who watched the Biden campaign. So that question, I think, is resolved. The real question is one of, with all this new increased activity, are you behind a line of 5,000 people because it's such a popular way to come to the US and find yourself either in retrogression or simply just sitting for 2 to 3 years waiting to get processed because you're at the end of the line? Or did you invest in a national interest expedite? Of course, that's self-serving, but it's also just a fact. If you're not in a national interest expedite project such as ours, then you're going to be behind every single investor that invests in our project, and we'll be waiting probably an extra couple of years just to process your I-526. And that's just the fact of numbers. These processing times are long, and if you're at your end of a long line, it's going to be a problem. So I personally think that if you're not investing in an NIE or making a deliberate decision, years your I-526 is going to get processed, and it's even more important that you make that decision early on when you're doing due diligence. You just need to use that as a filter in discerning which projects you're going to spend your time looking at.
Thanks, Eric. Matt, do you mind if I ask you this question as well? What are your thoughts?
Yeah, 2020 20 saw its challenges. I think everyone knows that. And I think with the turnover of a new administration, we have a lot of positive winds blowing to help immigration in general. I think it's no secret this new administration is much more pro-immigration than the last administration. I think you're seeing things here. I'll tell you, even with the Biden bill, you're seeing things put out in that Biden bill that could be favorable for EB5 that actually could maybe render even an expedite useless in the event that, you know, you end up getting certain visa relief or you get an elimination of a country cap or things like that. And so those are all things that I think help every EB5 investor. Now, we really don't know how all those things are going to play out, but I think we're in a position now where we have, you know, positive winds blowing that could really help investors from all over the world, backlog countries included. And I think the time to, you know, take a renewed interest in EB5, to get involved in the advocacy efforts to support the program. And if you're looking at becoming an EB5 investor, you might have a lot of positive things going for you right now. Roberto mentioned processing times are coming down, and I think we're going to see a continued effort to get those processing times down.
Yeah, I agree with you. We've seen the adjudicators who have been moved to the 829 stage now have been moved back to the 526 stage, and we think with the lower number of filings and the increased number of adjudicators, we also expect a significant decrease in the processing times. And then I think the issue of having Mayorkas now leading the Department of Homeland Security really bodes well for the industry. This is a guy who ran USCIS, was very involved in EB5, very familiar with it. So that's a positive note as well. So let's talk about some of the trends in India. And Lavanya, if we could go to the next slide.
So Kurt, I just want to say one thing about that, you know, more adjudicators and the support behind this administration, if I could. And that's that in 2011 through 2014, you had cases that were being approved in as little as 4 months. So that goes to show, and that was when Mayorkas was the director of the USCIS. Now he's the boss of the director of the USCIS. So I think you can imagine a much brighter future ahead where the program is working the way it's supposed to have originally, the way it was written to work. This is the last 4 or 5 years have somewhat been an anomaly, which have not been helped by the former administration.
Sounds like we lost Luke.
I think we lost Kurt there for a second. I think he's going to join us back.
Sounds good. We operate in the Indian market. We have we generated about $40 million of revenue in operating our plant there. So we're pretty sensitive to what the domestic issues are in India. And I think one of the items we see for the Indian market in 2021 is a full recovery from the COVID economic and frankly, personal impact that happened throughout 2020 as there was severe restrictions on travel, severe restriction on any kind of commerce and activity for much of the middle of 2020. So the opportunity to recover from that and especially for international business people to be able to travel, families be able to come to the United States and just to visit their family and friends was something that was very restricted during much of 2020. And at least in our experience, that caused EB5 investors to not stop, just slow down and say, let's wait for a few months and see how it goes. And so the pace of inquiry, the pace of people wanting to now get on with their lives has certainly increased dramatically in 2021. I think that's a major turnaround for the EB5 program, with the India market, of course, being our probably #1 most important market for the next couple of years. And so we hope to see that trend continue and expect to increasingly be able to reach out to the Indian population with special programs really focused on their needs. And our company certainly has, we're based in Silicon Valley, and we have a very strong Indian population in our area. Many of our clients actually are moving to California and see our project, which is in Central California and in Silicon Valley, as being close to where they're going to be living and where their kids are going to school. Since I think we lost him, do you guys, any other guys have any items for this slide, or let's go on to the next one?
Actually, I'm back, Eric.
Okay, back there. I didn't see.
Yeah, thank you. Sorry, guys, my internet is not as strong as I'd like.
There you go.
So I don't know if we had a chance to hear from Raj. Raj, have you had a chance to talk about the Indian market? I think that you have a very interesting perspective on it.
Sure. Thank you, Kurt. No, I'll share a few thoughts. Look, I think for us as a firm, as I mentioned earlier, our firm was founded by an Indian. I myself am from India, and we spend a tremendous amount of time working with the Indian ecosystem. We have a sufficiently large team there. We have, five of us are actually based in India. From an India perspective, a couple of observations. One is that our largest use case of investors tends to be those that want to send their children overseas for a US education. And we don't see that slowing down. We remain very optimistic that the US education system will continue to attract top talent from India and other markets. And we see that, that trend continuing. Certainly we have had a challenging year last year, as some of you guys have already heard, from the US elections, people putting the EB5 decision on pause because of that. COVID was certainly another factor, and then the financial market instability. I think we're turning the corner on all these points, and I think we're seeing a lot of families that we were in conversations with in 2020 that went on pause, coming back to really revisit this conversation. One big reason being that the universities are now much more clear on what they want to do with starting their academic year. We had this very bizarre year last year of virtual learning and on campus and so forth. And it was very confusing to our prospective investors. I think there's a lot more clarity now. And so that is one, I think, trend that we will see benefiting all of us in terms of pursuing EB5 investment. I would say the other point, Kurt, which we touched on earlier this morning when we spoke, is just this notion of plan B for many families, right? And I think COVID has woken up a lot of families around the world to this notion of, hey, I should perhaps have an alternate option in my life, and US might be that option. So we are seeing an increasing number of families that are looking at a full family migration. And so it's not just about education, it's about being closer to family that may already be living in the US. It may be even starting the EB5 process earlier in cases where children are not necessarily ready to go to college, they're younger, but because there are career opportunities for the head of the household, the mother or father, to pursue opportunities in the US, we are seeing that trend as well. India, as we know, has gone through a lot of phenomenal, interesting changes, but it's still a challenging market in many respects. And so those that find a different type of interest career-wise, they want to avoid a lot of the infrastructure challenges of India, the taxation challenges of India. US continues to be, I think, an attractive market for many of those folks.
Yeah, I agree, Raj. Thank you. And I'm sorry, Pardeep, I don't know if you had a chance to talk at all about the H-1B market. Is that something you had a chance to touch upon?
No, thank you, Kat. So basically, in terms of Indian market, we always see Indian market in three ways: the Indians living in the US, Indians living in India, and Indians living into the other countries. And definitely, as Raj has pointed out, he's actually based in Dubai. Definitely, he's been seeing a lot of interest from the Indians living in GCC, in other regions, and from all around the world. So here in the US, the people who are on a H-1B visa, it's a very strong market has been going on here. So we have seen, even we closed approximately 15 clients, 15 people in 2019, not in 2020. 2020 was very tough for everyone. But 2019, we even closed 15, 20 clients who were on an H-1B visa because of the long waiting period of those Indians who are waiting to get a green card. So that H-1B market is strong, converting into EB5 is strong. And we think we're expecting that will be continuing as a very strong indicator of that, of converting into EB5 leads. For the Indian who are living in India, we have many clientele over there. And as actually Raj has pointed out that everybody went pause in 2020 because of very bizarre situation, COVID and every kind of other stuff. People are now coming back. Now we have been now getting a lot of queries back into the market that people have been inquiring, and I'm pretty sure, Kurt, that you're also very busy in getting inquiries in terms of getting due diligence side. So the market is picking up from from in our region, but especially in the Indian, because EB5 program, we always see it's a very specific program. It's not a program. It's not a kind of program where people will come just for the sake of passport. Everybody wants to have EB5, US visa, some for specific reasons. And over 90% of the people who I would say that's people get the green card because of their kids. They want to send the kids for the overseas education, and the US is the best market in terms of getting the higher education. So those parents definitely want to have their green card for the kids, for the safety of their kids' future, because even getting the internship into the US markets without having a green card on that international F1 visa is very tough. So we believe that market is very strong, will continue very strong, not only in the US on a H1B front, but in Indian living in India, and as well as Indian living into other region.
Thanks, Pardeep. And you're right. Our marketplace has always been very heavily reviewed by Indians. Indians are typically the most active due diligence investors that we've dealt with in the past. So Lavanya, if we could go to the next slide. What I'd like to just kind of talk about is the due diligence that you should be looking at doing on a project. So we've broken due diligence down into 6 categories. Just to quickly run through them: the business plan and projections. You want to understand what it is that the business model represents. What are the projections? What's the feasibility of this? And then the second aspect is management. You want to do some background checks, understand who's running the show, who's protecting you as a fiduciary. Anyone who's got control of your money anywhere along the process, you should understand and know their background. And are there any conflicts of interest? Matt, let me just stop there for a moment. You're one of the more active regional centers, probably the most active regional center in the industry. How do you select the next investment?
Yeah, it's a good question. We have projects in all different asset types. They really run the gamut. In our earliest days, we focused on closed military bases. That's what our acronym stands for. We took on projects where the government had come and closed down bases, and we did new infrastructure development to reintegrate those into the local communities. And we've spread out from there. We've done stuff in utility grade solar, we've done biorefineries, we've done hotels, we've done office, we've done apartments, you name it. And one of the asset types that we're most heavily focused on is industrial logistics deals for big Fortune 500 companies like Amazon and Starbucks, Pepsi-Cola, things like that. And what we're doing is we're looking at asset types that we know are thriving in the current market. And so we have to be sensitive to those sorts of things. We have to look at projects that we think are going to make great economic sense, but then also make sense from an EB5 perspective. Obviously, EB5 starts with jobs. So you want a project that's straightforward, one that is a little less complicated to complete. You want to make sure that the financing is going to be in place, that you have a developer that you're working with that is fully capable of completing that project on time and on budget, that they've mitigated any other environmental or entitlement type challenges far in advance of your undertaking of that development. And then you want to make sure that they have a viable exit plan. So our projects are structured as loans. They're 6-year loans. And at the end of that 6 years, our investors expect to see those loans repaid. And so that's our job, is to make sure that those loans get repaid. And so we're working with groups that we think can accomplish that have a history of accomplishing that. But we're also, again, very sensitive to the times. As I mentioned earlier, COVID saw its challenges in 2020. And so we're trying to look at industry sectors that are going to thrive now. And we're heavily focused right now on logistics expansion and in categories that, asset classes, I should say, that give our investors the best chance of success.
Right. Great. Thanks, Matt. And Raj, can you talk a little bit about, you're an independent, you're not associated to the developer. So when you select a partner, how much do you look at the management structure and the experience of the people you're working with?
Sure, Kurt, thank you. Look, I think for us, we act as a fiduciary to the investor. And so we take a very, very focused role on structuring these deals, structuring these projects in a way that is in the interest of the investor. We do months and months of assessment, and part of what we really focus in on is the track record of the developer, right? So in the case of one of our projects, which is the Hall of Fame Village project in Canton, Ohio, we've partnered with IRG. Now IRG has a 47-year track record of capital raising and refinancing. There's been over 700 investors that have come through their process with over $350 million of EB5 capital that has been deployed. They've had 100%, close to 100%, 99.9% I-526 approval rate across their 10 funds, right? Their I-829 approvals is 100%. So for us, we really spend a lot of time, Kurt, on looking at those metrics and saying, okay, is this project something that is going to de-risk investors in terms of immigration risk as well as financial risk? And I think most, if not all of us on the panel will agree that the India market is a massive one. It's here to stay. And I think, Kurt, as you rightly pointed out, Indians do tend to be a lot more detail-oriented in their due diligence. They will get into the numbers. They will get into all the various questions. The other day, I had a FAQ that I put together of 55 questions from an prospective investor. So this is the type of market that India is, and we love it because many of us come from India, but we also really appreciate it because that level of diligence that they expect is also the type of diligence that we try to deliver in terms of selecting these types of projects.
Right. Thanks, Raj. I just wanted to back up a moment. When we look at due diligence, you're really looking at two areas, right? You're looking at the likelihood you're going to get your immigration benefits. And then the second aspect is what we have here on the slide, which is what are the likelihood that you're going to get your payment, your investment capital repaid promptly. So when we look at the financing aspect, what we're typically looking at the senior financing, bridge financing, government support, your capital stack, where do you stand in the capital stack, whether there's debt or equity, whether there's, what is the corporate structure. So Eric, if I could turn to you, you guys have a bridge structure in your project, and therefore you protect investors from the concern of running out of money, right? The project is fully capitalized already, is that right?
Yes, we're actually backed by a $3 billion Toronto, Canada fund that has been a partner of ours for 12 years. And they have funded the projects we do in a bridge loan format, which is one of the three mechanisms to actually launch a project in the US. The other two are basically start with no capital, raise the EB5 money, and then try to get the rest of the financing together based upon the EB5 money essentially being their equity, or turn around an existing company and try to save their jobs. And in the process of saving those jobs, the EB5 investors, the equity in that process. In our case, we actually take the capital risk first. We create the jobs first. And at no time actually is the investor actually investing in the project that hasn't already created the jobs. We have over $200 million of financing that we've already deployed in these two phases. And that $3 billion fund enables us to completely create all the jobs for the entire project before any of the investors at any particular phase are actually invested, because their use of funds is repaying the financing that already occurred and the job creation's already occurred. So it's a very unusual structure. Most companies don't have a $3 billion funding source, certainly don't have over a 15-year relationship with that firm, and also are not public companies that have access to other sources of capital. If you look up AMTX on the NASDAQ, you'll notice that our stock is up over 2,000% over the last year. We're one of the best performing stocks on the stock market. We performed better than Bitcoin in the last 12 months. So the underlying parent company stock market value of the company assures investors not just of repayment, which is interesting, but what's more interesting is how quickly can they get their I-526, because without an I-526, they don't enjoy the benefits of a green card and the time to spend with their family in the United States. And so our national interest expedite was effectuated by directly working with the Vice President of the United States and determining that our military benefits of our project were of such importance that we should be put ahead of every other project in the United States, along with only just a couple other NIE projects. And I think we're the largest by far. So we're an opportunity for 192 investors and to their families to the US, standing in line ahead of every other investor that's interested in doing so.
Well, there are certainly a short list of projects that do have the expedited approvals. So the next area I'd like to talk about is the progress to date. So as you're investigating your projects, you want to determine what the project timeline is, what stages of completion have they reached, have there been any delays, changes in the budget, any unforeseen circumstances. And Roberto, I was wondering if you could talk a little bit about your project. It's kind of unique in that you are investing with the investor. Can you talk a little bit about the progress that you guys have made to date?
Yeah, sure thing, Kurt. But first, if I could just back up and just try to provide what I think is a useful framework and just understanding the EB5 program. This is investment immigration, and they're two somewhat separate things. So just on the immigration side, as long as you're making an investment that's at risk, as long as you're going to create a sufficient amount of jobs, and as long as your source of funds are satisfactory, which is why it's important to have an experienced attorney, you will get your green card. So it's kind of exclusive of the success of your investment, right? And I think that's very important because a lot of the time people are so focused on, the green card that they forget to do their due diligence on the actual investment. And so they're two kind of separate things here. And, the truth is that lately, I think because the program is more mature, because I think some of the bad players have been weeded out, approval rates have been very high in the last 5-10 years. I-526 and I-29 approval rates, if you were to take the average of both, you're looking at about 95%. And really, most of those denials come from source of funds, which going back to, that's why it's so important to have a good immigration attorney. I think, here in the IREX show, there's a couple of great ones that have specific experience with the EB5 program, because not every immigration attorney does have that experience. So I just wanted to make that sort of clear. And then moving beyond that, yes, it's all about doing your due diligence. You got to look at the fundamentals. And, as a regional center, we have a license, all of the panelists, and there's several other regional centers that have that license to sponsor EB5 projects. But you just want to make sure that the value that they're bringing is commensurate to what is actually being charged to the project, right? If the regional center is raising these funds, what is their actual business model to achieve profits? In some cases, regional centers are bringing more leverage to a project, or they could be replacing bridge financing. But what is the cost of that original bridge financing is a question you can ask. And what happens if you can't raise the EB5 fast enough? If you're an EB5 investor that's coming into a project that's replacing bridge financing, or coming into a project where that is a loan structure, you need to look at the actual cost of that loan. Obviously EB5 investors don't get a super high return. But if you're not going to get a high return as an EB5 investor, you want to make sure that your capital, when it goes to the project, you want to look at that cost of capital. Because if it's a high cost of capital, and the regional center is sort of enriching itself from that high cost of capital, that's what we call moral hazard. And that's where, the investor is actually at more risk at that point, because you're kind of layering on the debt. In most cases, EB5 is not a senior loan, it's a second loan. So if something happens, like COVID, or, there's a downturn, or the costs of the project go up, then a lot of time, that's the senior lender that's in charge of liquidating that project, and you might not be left with all your money. So going back to immigration, investment immigration, on the immigration side, luckily, I think as an industry, we've done a good job at being able to issue green cards. It's more so the safety of your investment. That's when you need to look at. So you got to look at the structure of the investment. Is the regional center, are their interests aligned with yours? And so going back to what you said, Kurt, in all of our projects, we invest our own money in our projects. We're project sponsors in these projects. And so we structure our projects in a way that we can't get the majority of our profits until the investors have gotten theirs.
Right. Sorry to interrupt, Roberto. I just want to get through this slide. The next area of interest is the exit and repayment. So repayment strategy, what's the exit? How do you get your money back? You're going to be looking at projected valuations. You're going to be looking at the investment term and the payment of the return on investment. Pardeep, could you talk to us a little bit about, Pardeep, could you talk a little about the exit and repayment? You've structured your exit, I believe, with a 5.5-year exit strategy. Is that right?
Yeah. So we have a 5.5-year exit strategy. Just to give a little bit, actual background about how we select the projects, and definitely everything is included. All those points are included, and that part. So as Kurt, even that. So we review approximately 300 projects every year, and we select 3 to 4 projects out of 300 projects. We are not a developer; we are an asset manager. So definitely we are not biased towards selecting the projects. So we select the best of the best projects, and we have a couple of criteria when we select the projects. Like we don't go with any project who does not have a bank funding. We always have a bank funding who should be supporting. We always want have a third set of the due diligence of the eye. Should be having a keep and a check on those project process and ongoing development. So we always structure a deal in a way that 60% bank funding, 10 to 15% of the developer, and the rest 25 to 30% we put into. We don't go beyond 25 to 30% of the total exposure of the project. The reason is simple, because we wanted to have the maximum jobs out of the project. So the jobs, maximum job per investor should be as much as high. So our average jobs for all of our 35 projects are approximately 20. And we structure the model in a way that we always go into 2 sides. Number one is the immigration perspective, other one is the investment perspective. So when we structure a deal, we always do equity financing. We don't go for the loan financing. It's a huge topic. Definitely, we have everyone has a different business model and different pros and cons. But we go for equity financing. Why we go for equity financing? Because of 2 reasons. Number one, we want to take the control of the project. We always have a 50% board seats when we do the deal. So 50% board seats, because we want to take a control. So if anything goes wrong in any side, it's a real estate investment. So anything can go wrong. We want to be on the table of the negotiation with the bank or with the with the developer. And apart from that,
Pardeep, that's actually the next item I just wanted to cover. So I'll let you continue, but I just wanted to mention that the last area of interest to us when we're looking at an investment is we're looking at the rights and remedies.
Okay.
If things don't go right, what are your protections as an investor? And Pardeep, you mentioned that you have board seats. You typically require to have board seats on the project so that you have more control of distributions at the end of a project.
Yeah. So and apart from that, we always have a class of the exit class, which is in 5.5 years. We invest in the projects. Those are typical commercial kind of projects where we build the project, stabilize, and sold it out. So we want to give our money back after 5 years. So we always give a 6 months grace period to a developer. So either he has to actually refinance the amount from the bank, he has to give us back money. If it's his legacy asset, he can keep it, but we want our money back, or he can sell it out. After 5.5 years,
Pardeep, I'm just going to interrupt you for a moment because I know you have a lot to talk about your project, but I just want to include everybody. So Raj, can you tell us a little bit about your project, and feel free to talk about any area of due diligence where you think the LCR has strengths that investors should know about?
Sure. I mean, I think for us, it's we typically would look at projects with a 5-year exit with 2 1-year extensions. So that's kind of just covering the point that we just discussed in terms of return of capital. I think in terms of strengths, I think one realization we've had is different markets, even not just globally, but even within India, different investors will gravitate towards different types of projects. And so we at any given time will have luxury hospitality on our platform as a project offering. And that's kind of been our strong suit historically. The Four Seasons Hotel in Miami, the Surf Club project. We currently have another offering in Miami, the Legacy project. But the NFL Hall of Fame Village project, the one I touched on earlier, is quite different. It's an iconic project. It is effectively a sports complex and entertainment center for football fans, right? The National Football League, NFL. And so it is very different. That project may or may not resonate with a lot of folks that don't necessarily understand football, but once they dig into the track record piece, and that's kind of, Kurt, what I was talking about earlier, is the emphasis on the developer and the track record of the developer. And I think that's where we, I think, have certainly a differentiating factor. We do play that role, as I mentioned, as a fiduciary. So for us, it's really in our interest to identify projects that have had return of capital, that have delivered on the immigration benefit. These projects have. We're also now not too far away, probably weeks away, from announcing another 5-star hotel project, luxury hospitality once again, that I think will be compelling for a lot of folks in this part of the world.
Thank you, Raj.
Sure.
So just from the due diligence standpoint, when we talk about rights and remedies, we're typically looking at the collateral and the valuation of the collateral at an early stage, obviously. We're looking at the enforcement rights. You as investors, what are your rights to enforce? Are there any complications? Are there any entities between you and your collateral that prohibit you from getting access to them? And so what's your ability to pursue remedies? Well, I think we've gone to the point where we were asked to start taking questions. Lavanya, is that where you think we should be, or do we have more time here?
I think we've got 2 minutes more, and then we can start with the questions.
Okay, great. So then, Matt, I just want to make sure I include you in here. Do you want to talk about any aspect of your project that you think is especially strong from the standpoint of some of these categories?
Yeah, and actually, there's another comment that I want to make. And, one of the things that I think is one of the most important parts of due diligence is understanding the regional center that you're working with and understanding the developer. I think Raj touched on it. We've all touched on it, right? Understanding the developer and their track record. And when we talk about when things go wrong, what are your rights and remedies? Well, in some cases, it's left to the regional center to enforce the rights and remedies under the loan agreement. We've had to take default action under a developer. We've had to pursue those developers. And so if you do a simple Google search of the developer that the regional center is working with or the regional center themselves, you're going to be able to find out what their track record is. If they've ever worked in EB5 before, if they've been a part of a deal that's gone wrong, if they've been forced to adhere to the terms and conditions of the loan agreement that they made with their regional center. Those are really easy things to find out. You can just do a simple Google search of the developer's name and EB5 and try and figure out what their involvement is. Do they have a bad track record in EB5? Same thing with the regional center. The other thing is with regional centers that are brand new to EB5 or regional centers that have only taken on one project or something like that in the past, you should really dig in. There's a lot of unethical groups out there. There's a lot of groups out there that are touting certain aspects of their projects, certain strengths of their projects, whether it might be a pre-approval or an expedite request, that have also gone sideways in how they do certain types of things. And I think the industry has seen its fair share of problems with regional centers that market, almost niche aspects to their project, like an expedite request, that then later become a problem for the investors because they didn't do their homework. They didn't do their full scope of homework on the project or the regional center themselves. In fact, The USCIS has even barred regional centers from marketing expedite requests. And so if you have a regional center out there that's marketing an expedite request, I think you should question the ethics of that regional center as well. So those are all really important things to take into consideration when you're looking at due diligence.
Yes, that is true. Okay, so Rohan, I think it's time for questions.
Yes, Kurt. We can go ahead and anyone has questions, please go ahead and click on raise your hand, and Lavanya will go ahead and unmute you so that you can ask your question. Lavanya, do you want to take over?
We do have a couple of people who've raised their hands, so I'll unmute them one by one. Starting with Mr. Anil Gupta. Anil, you can unmute yourself and go ahead and ask your question.
I want to understand if I hold my investment in LLC company, is it possible? Because it will give me some protection, liability protection.
Sorry, I didn't understand the question.
If he holds his investment in a limited liability corporation, whether that is first of all allowed, and then he mentioned that would provide him some liability protection. So I think there's two issues. Number one is, do you need liability protection if you're an investor? And then number two, is there a technical problem with holding your investment in an LLC as you're going through your process?
Okay. Eric, it sounds like you've got a handle on this. Do you want to answer that question, or?
Well, I'll answer the first half of it, and then I think somebody else probably want to answer the second. In a corporate structure in the United States, the shareholder does not incur liability by making an investment into what is, at least in our structure, a limited partnership. Specifically, the limited partnership protects them from any direct exposure to the project. So they're investing in the limited partnership. The limited partnership then turns around and makes the investment in the project. So if there's any activity of the project that for whatever reason incurs liability, the investor already has the protection of the limited partnership between the individual investor and the project company. So I think it would be an unnecessary additional step to also add a limited liability company on top of the limited partnership structure, because the industry has already structured it to provide that protection for the investor. I think somebody else could answer the technical question of whether there's any specific problem with holding the investment in an LLC. I really don't have a view on that.
Okay.
Well, Eric, I think you just gave an excellent explanation. In most cases, the EB5 investors are going to invest in a limited partnership, and from there, the funds are going to either be loaned or invested as equity into the project, the job creating entity. So the technical language in the industry is the new commercial enterprise, which is this limited partnership, and then the job creating entity where they're deploying the funds. So to do an LLC and then invest in a limited partnership, you would have two new commercial enterprises, and that structure, I think, is not going to be looked upon with favor with the USCIS. Typically, you have one new commercial enterprise that you're investing in, and then from there, it can invest in a couple of different job creating enterprises, but that's the typical structure for EB5 investments.
Great.
Okay.
Thanks.
Okay. Thank you.
Okay. Thanks, Anil. We'll have a next person, Bhavin. Hi, Mr. Bhavin, please unmute yourself and ask the question.
My question is, is there any minimum qualification required for the investor visa?
Any qualifications for someone to make this investment and to qualify for the program?
Yeah, that's right.
Matt, would you like to answer that?
Yeah, so just purely from the standpoint of the investment itself, the minimum investment amount is $900,000 US, and that's if it's in a targeted employment area or a rural area. Most projects that are on the market are. If it's outside of that area, it's $1.8 million for that investment. We require those investors to be accredited investors, meaning they have a net worth of over $1 million. There's a few other ways in which they can meet that standard as well. That's about it. When you look at the program's requirements, they're going to have other requirements, such as the USCIS is going to want to see that the funds that were used for the investment came from a lawful source, and that they were moved from the home country into the United States in a lawful way. On that side of it, it's going to be really important that the investor work with qualified, financial planners or a chartered accountant that can help them. And it's also really important. It's something we haven't really touched on. It's really important in EB5 that the individual investor have a strong EB5 attorney, someone who's practiced in that industry before, someone who understands what they're doing, someone who understands immigration law, and can give them advice and guidance on the best ways in which to proceed with the program.
Yep, it's very good advice. And if anyone needs an attorney, our firm is more than welcome to make referrals to people that are expert in the industry. Any more questions?
Okay. We can go to the next one. Mr. Nihad, please unmute yourself and ask the question.
Yeah, hi, this is Nihad with you. I just had a few questions. If my father invests in the EB5 visa, do other family members also get advantage of it?
Raj?
Sure. Hi, Nihad. So if your father's investing under his name, he would have the option of having his wife and any children under the age of 21 be part of that application. So depending on the age of the children, and if you would like to have also his spouse be part of that, they would all be covered under a single application. Does that answer the question?
Yeah, I understand. It's just that, I and my parents were like a 3-member family, and I'm currently 24. So we're actually looking for something that would allow us all for the same opportunity,
Understood. Yeah, I mean, from an EB5 perspective, if you're looking at all 3 of you to be, looking at a migration or getting access to the green card, the challenge is because of the age factor, right? If you said you're 24, that would require a separate investment, a separate application, unfortunately.
We actually have a family business here in India. So is it possible that when we make the investment and when we show the business, we could just show that we are continuing to branch out this business and bringing it to the United States, and all 3 of us are a very integral part of this business?
Yeah, I mean, you could certainly go down the kind of the business route in demonstrating that you're expanding the business. That does require a slightly different process. I don't know if anyone else on the panel wants to chime in on that. Roberto or anyone else?
Yeah, that would be an L1 visa that you would go after. And then from there, you could switch to an EB1C. You'd have to show that they're all in a managerial capacity. Therefore, you want to have a good amount of employees that you're overseeing. Typically, they want to see 2 levels of management. So you're managing managers. Salaries are very high in the United States. You'd have to make a pretty significant investment, I think, to be able to sponsor 3 family members, but it's absolutely doable. And I'm sure one of the attorneys could help you with that. The good thing about EB5 is simply that you don't have to worry about managing, that investment. It's very straightforward. You make the $900,000 investment, you create the jobs, and you get the green card. Other programs are, I think, a little bit more discretionary on the USCIS. They're not very clear on minimum investment amounts. You might have a restaurant that has 20 employees and they still won't give you an EB1C, which is the ultimate sort of green card. L1, they won't give you a green card as a 7-year term. So at that point, you need to try to go for the EB1C. So it's just, you could have a 20 person restaurant, or you could have a 6-person tech firm, and somehow they might give it to the 6-person tech firm because they're better, higher paying jobs. It's not very clear as to how you can, what's a safe EB1C investment. So I think that's just one of the great positive EB5 is that it's probably the sort of most predictable visa program we have for permanent residency in the United States.
Yeah, I would just add that I agree with what you just said, Roberto, and I would also say that it's certainly the most passive, right? So you really don't have to, do anything other than meeting the requirements that were touched upon earlier to proceed. So again, depending on the nature of the business, the size of the business, and so forth, it may make sense to do L1, but I think an attorney would be a good place to start.
And sometimes, we have investors that want to be entrepreneurs, but sometimes it makes more sense to separate your immigration process from your business, because you don't want to have pressure on your business to have to employ people and really have to sort of, do things just to get the green card. You want to run a business the way a business should be run. And so it's sometimes people get sort of caught up in having to do more things that they otherwise wouldn't do. And the business ends up suffering, and they end up having to put a significant more amount of money into the business just to be able to get the visa or stay eligible for the visa. So just, something to look out for unless you have a very, very clear idea of what you want to do and have a great structure for that. Maybe EB5 is a better route, but that's up to you and your family and speaking with an immigration attorney.
Yeah, Nihad, you can, if you have any further questions, you can just go on to the show and go over the booths of all the participating companies and continue your conversations there. We have some couple of more questions. We got a question from Mr. Ravi saying that being a small business owner, can he use his business funds from his company to invest in any EB5 project?
Pardeep, you want to
so there is not any kind of the restriction that from what is the source of your funds. So if you are a small business owner and if it's a legitimate business and if you want to invest into any EB5 project with any regional center, yeah, you could have. Only you have to prove that everything is being recorded, being taxed, and all of your sources are legal. Whatever you're earning, if these are being recorded, yeah, you can invest into EB5 project. Definitely, yeah.
Okay, great. And one last question that we got from a couple of people. They want to know whether E2 visa would be better and quicker than EB5 visa for his son. Mr. Munjal has his son studying in management in the US. So he's asking that which route would be better.
Roberto, you have an E2 to EB5 solution, right?
Yes, that's correct. I think the E2 program is a great program. It's essentially an entrepreneurship visa. Unfortunately, Indian nationals do not qualify because the United States and India do not have a treaty, for E2. But there are countries such as Turkey and Grenada that have made their passports pretty accessible. Grenada, you can essentially buy a passport for $150,000 plus some processing fees and legal fees on top of that. And they'll issue it to you in as little as 3 months. And so from there, you can turn around and apply for the E2. You could apply for the E2 basically, right away once you get the passport. And if you were to apply for it in India, it'd probably take about 3 months to get an appointment through the consulate there in India. Or you could even come to the United States on a visitor visa and do an adjustment of status. So it's a great bridge. It's a great visa. It's if you have a Grenadian citizenship, it renews every 5 years. So as long as your business is still active and you still have your employees in the business, then you can renew it. There are many people in the United States that live here. I've been living here for 20, 30, 40 years on an E2 visa. But it's not a long-term solution in that your children, once they turn 21, they no longer have status. It's also, it's a little difficult, you just mentioned your son. If you were to do an E2 visa, he can only work for the company, for that E2 company. He cannot be a W-2 employee of another company. Now he can do contract labor for other companies. So there are many companies that I think would be fine with hiring somebody, that doesn't want benefits and just wants to be paid on a contract basis. But there are large companies, Fortune 500 companies, that they just don't do things that way. So it just depends on, what kind of employment you go for. If your son's married, his spouse could always get the E2 visa. And then as a spouse of the E2 visa investor, you can get a work authorization permit and work for anyone and be a W-2 employee. So, you know, E2 is good. It's a great bridge. It's a great tool. We do have an offering that allows you to get an E2 visa and an EB5 visa, all for the, you know, minimum investment of $900,000. And it's a very, very popular program, you know, lately, because EB5 processing times, you know, have been taking longer. So that's a great bridge as well. But it's really just, it comes down to, you know, what are your family plans? You know, how long can you wait, you know, for the visa? You know, how old are your children? Ultimately, EB5 is really the best solution. It's the best, you know, long-term solution if you plan on establishing a long-term presence in the United States. But, you know, E2 is just another great tool that I think, you know, hasn't been utilized enough.
I would just want to echo that real quick. We also came across many investors around the world that were getting stuck on EB5. And for those that were not able to proceed, one of the reasons could be, in fact, the budget constraint. $900,000 is not a small amount. The E2 was an attractive option. And so we also ended up onboarding an option for Grenada. As Roberto said, Grenada shares a treaty with the US. And so that's becoming an increasingly popular option. So for any folks that are interested in learning more about that and looking at opportunities with Grenadian citizenship, we'd be happy to talk to you.
Okay, so with this, we would like to go ahead and wrap up the panel discussion. Thank you all the panelists for such an insightful panel discussion. I think we've covered our bases with almost everything that has to do with EB5. Thank you, Kurt, for moderating it. I think you've done a fabulous job here. In case you didn't get a chance to ask your questions or your queries remain unanswered, the panelists will be available to speak to you in their virtual booths at the IREX Residency and Citizenship Virtual Exhibition. We'll post the link on the chat for your reference. Please join the virtual expo via the link mentioned in the chat. Thank you, everybody.